Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Friday. Man, we made it. We got here. A lot of things to talk about. Again, expanding strikes at 2 out of the 3 major auto companies. We've got a rally in gold and silver today. Everybody watch out for the Japanese yen and how high are rates going to be here in the U.S., and how the heck are we going to pay for it? 800-951-0592. That is our toll-free number, the physical delivery of gold and silver. And, of course, the website at allamericangold.com. And I just got updated Silver Eagles. I just want to let everybody know there are no more backdate silver anythings. We have 2023 Silver Eagles. That is all that we have remaining right now. That is not a good thing. That just tells you, hey, when those run out, get ready. I think we're going to go back to seeing these higher premiums. So if you're a Silver Eagle buyer, today is your day. They're $620 a roll, and that's really on sale right now because really they should be $640. So if you're looking to buy Silver Eagles at the low premiums, today is probably your day. We were informed by all 3, and we know all the major wholesalers that there is no more backdate Silver Eagles. There are some 2023 silver, but when we get down to that never lasts very long. So if you are a Silver Eagle buyer, today is the day at $620. By the way, silver's up another 25 cents here, $23.70. Silver really just ignoring the Fed completely, and again, I think it's threefold. Number one, there's no inventory. Number 2, there's demand, and talking about like Silver Eagle demand, but also demand silver in general, right? The whole green thing, that's not stopping. Matter of fact, I don't know if you guys saw it, Michael Bloomberg, the former mayor of New York, right, billionaire, said that he is going to spend $500 million to close every coal plant in America that's left in operation. Wants to get laws passed to say that we'll never use coal again. And by the way, yes, peace and love to wind and solar, which, hey, you know what, Jason? Okay, great. I mean, I think that's very short-sighted. And again, they don't want cheap energy. You want to end prosperity anywhere in the world, take away cheap energy. But it's a bullish sign for silver, as if silver needed another bullish sign, but definitely a bullish one.
Absolutely, Joe. Yeah, I mean, the world is no matter what the leaders of the world want. There's a growing population. There's more people, and with more people, there's more energy usage. So if you squeeze off any of the energy you're using with the way the world is today, it's going to create a lot of problems. As you were talking, I just called up a chart that I look at, which shows, back to 1800 all the way to today, all the different types of energy, from just burning wood to oil to coal to all of it. And as you look at it, it just gets bigger and bigger. They color code the different types of energy. And if you just suck any of these energies down, if you pull back on any of these things, it's going to cause a recession, a depression. It's going to cause worldwide problems. And so it sure seems like on purpose, Joe, we're being led down this path, and hey, well, let's not pump any oil out of America. Let's just destroy oil abilities in Russia. The Middle East is just not going to make any oil. No. Okay, well, Biden's just going to get rid of coal. Yeah, if you're listening, these are things that are going to make life difficult for you and everybody you know. Because just like Joe has said for years, energy, we need all the energy we can get to make the world run. All the energy
we can get, yeah, absolutely. And again, if it could be done, with wind and solar. By the way, wind's an absolute disaster. The Biden administration gave billions of dollars, billions and billions and billions of subsidies for all these massive wind farms. None of them are being built because guess what? Oh, well, what we said it cost, that was a lie. It actually costs a lot more, so none of these projects are going to get built, of course, unless what? The government comes out and gives tens or hundreds of billions of dollars more, right? And so, I mean, that alone just tells you that it's just not feasible. I think it's admirable, right? I would love it. Wouldn't it be great? Man, it'd be wonderful if we could do it. We're just not there, and forcing us to go there before it's ready. Well, you're seeing it. Listen, I know Colorado's got cheaper gas than us, which, by the way, just aggravates the you-know-what out of me. Gas is already $5. $5 a gallon here. And guess what? You know, go look. Okay, crude oil's up again today, right? Yep, here you go, right? And everywhere we turn, it's just not something that you know. When you talk about recipes for economic growth, let me tell you what's not in there. High inflation is not a recipe. High interest rates is not a recipe. High fuel and energy costs, those are not recipes for economic growth. And again, at the same time, the banking industry is teetering because why? Well, because for 15 years we were forced to buy super low bonds, and now all of a sudden we need to sell them, and guess what? They're losing their shirts. How about the Fed? Nobody talks about this. You know the Fed for 2023 going to lose over $100 billion on quantitative tightening. We'll be back after the break. (800-951-0592). A quick look here at the markets. The Dow's up a couple points. Not great here. Could be below 34,000 before the end of the day. As we'll update you on the strike. It is expanded. We'll give you the details. The S&P is higher right now. The NASDAQ is higher as well. The 10-year note, thankfully, by the way, 10-year note got above 4.5, down to 4.45. Say down 4.45 on a 10-year note. Crude oil is up almost $1 right now, $90.50. Gold's up let's round up, $8 right now, $19.29. Silver's up 25 cents, $23.70. We're watching that Japanese yen, 148 and change. Remember, 150 is where things start to get ugly for the Japanese yen. And if you're like a lot of people that are like, man, I'm just waiting, when's this shoe going to drop, right? It feels like, doesn't it feel like we're on borrowed time, right? Everyone's like, man, when is that shoe going to drop? And man, I don't want to be in it when it does. Check out our friends at Refi. You talk about great rates of return. 1 year. Can you afford, maybe you want to take I want to take a 1 year timeout. I want to wait a year. Let me see where Wall Street is next year. Let me see how I feel about next year. We'll know who's right. We'll know a year from now who the two nominees are anyway to run for the presidency, whatever. You get 6.25% to do that. You want to take a 5-year timeout because, again, I don't know how Wall Street does anything in 5 years. I really don't. I actually think I'll be surprised. I'm not saying it's it's not going to happen or it's out of the realm of possibilities. I'll actually be surprised if the Dow is higher than 34,000 5 years from now. I will be. I actually think, unfortunately, we probably got one more rally left here when the Fed says they're done raising rates. But after that, I see a significant downside. If you give the Refi 5 years, they'll give you 10.25% fixed rate of returns. It's not correlated to the Wall Street. Doesn't care about Wall Street. Doesn't care about the Fed. Well, I'll be honest with you, it doesn't really care about the banks either. Doesn't care about commercial real estate. It doesn't care about the presidency or Ukraine or gas prices. And guess what? You don't even have to worry about what your statement's going to look like because you know exactly what it's going to look like. You turn your income on. You can turn it off. You can do what you want. Check them out. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or call them at 888-YREFI24. Just remember, you got to have at least $50,000. You can use an existing IRA. Some of you can use a 401k. But check it out. But, Jason, I guess the news of the day has to be what happened here just moments ago. The UAW says that starting at noon Eastern. So right now, it's, almost 8:30 here, 8:20 here. So that's 9, 20, 10, 20, 11. So in about 40 minutes, something like that. Either 40 minutes or an hour and 40 minutes. I can't tell time anymore. I'm on Arizona time. We don't change the clocks. I don't know. But pretty soon, in a matter of minutes, the UAW says all parts distribution facilities. And let me tell you, you strike at the parts facility, that means you ain't making nothing. Right? You can't make trucks. You can't make SUVs if you don't got the parts. All parts distribution facilities of General Motors and Stellantis, so that's GM and Chrysler, are being called to stand up and strike. There will be strikes at 38 locations across 20 states. The UAW boss said that Ford is the only one that is serious about reaching a deal. It is a different story for GM and Stellantis. So, Jason, it looks like, well, it doesn't look like, this is what's going to happen. Right? GM and Chrysler Jeep, right? Stellantis, they're not going to be making any cars for the foreseeable future.
Yeah, I think this is going to be happening with a lot of industries. I was flipping through the news last night, and you got the writers and actors strike, and they're marching around. And these people that don't really know what's going on, they're like, "We're in a unique moment in history where unionized work is showing its strength." And I'm thinking, well, yeah, I don't know if that's really what it is, man. Maybe it's just economics, and you just don't see it. So I was just kind of chuckling because they're striking because they can't pay their bills, and these companies got to figure out how to keep the employees happy to just barely pay their bills. I mean, it's not like they're talking about vacation and pensions, Joe, right? They're talking about how many dollars per hour.
Yeah,
terrible.
And again, they're talking about right now. So how I don't know all the details. Some of it is really bad, right? You get hired on first as a temporary worker making $15 and change. I mean, that just sounds outrageous, right? You go to McDonald's and make more than $15. But at the end of the day, what I'm seeing, and again, I could be off base here, but they want to be at 80. They said that, hey, the offers that GM made, I'll focus on GM. The offer that GM made would bring most of the workers to $82,000 a year, which ain't that much money. And I get, I'll be as sympathetic to the UAW. Why not all of them? What do you mean most? Right? Shouldn't all of us be there? And again, I get it. I don't know, right? Unions, there's a place for them. This is a really bad situation all around because the country, and let's face it, the government has decided gas engines are bad. They're no good. You need to stop making them. And obviously these automakers are putting a tremendous amount of money into the electric cars of the future. A lot of R&D and all that stuff. Listen, that's a big task. Now, part of the problem, too, I'll say this, though. Guess what? They've also, Jason, they've spent billions of dollars buying their own stock back. Right? I mean, so yeah, I see both sides of this coin. Here's the bottom line, and we said this from the very beginning. The only losers in all of this is the consumer. The consumer loses it. No matter what happens, the consumer loses. Because when this ends, whenever this ends, the cost to buy a vehicle just increased dramatically. Because every one of these deals, they want a big raise right now. And then, over the next 4 years after this, raises every single year of 4 to 5%. And Jason, you know what? When you sit there and you look at it, I mean, think about this. A new vehicle right now, just nothing super elite, right? Kind of your middle of the pack new vehicle is about $70,000. Right? And that's not with all the bells and whistles. Now, yeah, can you buy one for $40,000? Yeah. Right? A stripped down, nothing, made in Mexico or China car? Yeah. But by and large, Jason, you're talking 70, what are we looking at? When did the cost of a new vehicle surpass the cost of a home? I tell everybody, you guys know the story. My wife and I, our very first home we ever bought, $135,000 in 2000. In 2000. You know how many cars cost more than $135,000 now? And of course, with this deal, I mean, we're in the course of a quarter of a century, you're telling me that what a cost of a house used to be is now what the cost of a car is. And this is what they've done. This is the predicament we're in. And you sit there and you think about how many people want to say they're middle class. I mean, I don't know, that 82,000 kind of puts you at the lower end of middle class nowadays, doesn't it?
Yeah, Joe, I think that's correct. And I think you kind of, at the beginning of what you were saying, you paid more to work at McDonald's. And I think that what that really is pointing out, it's more important to buy a Big Mac than it is to buy a Chevy truck. That's what I'm hearing. I mean, if they're going to pay more people to work at McDonald's, then McDonald's is more important. Obviously it's more. There's more complications than just that. But I mean, if you can earn $17, $18 an hour to start over at some of these McDonald's, and you're starting at 15 to get maybe a chance at a permanent job at building cars, it doesn't say much good about being an auto worker, does it, Joe? Oh, with unions, maybe McDonald's workers earn more money because there's no union. Unfortunately, Joe.
And I'll say this: I really feel bad for the parts suppliers that don't work for these companies. This is going to the cascade effect of this. It was one thing when they struck at one plant at Ford, one plant at Chrysler, one plant at GM. This is different now. This is going to force tens of thousands, probably depending if it lasts more than a week or two, hundreds of thousands of people to be laid off that don't work at Chrysler, they don't work at Stellantis, they don't work at General Motors, but they supply the parts to build these vehicles. Maybe they supply the uniforms, they do the cleaning service, they do whatever it may be, right? These people, this one's not good. Hopefully, this changes very, very quickly. If it doesn't, the ramifications of this may be, because we're waiting for what is going to be what ignites it. What ignites this gradual slowdown just got a lot faster. This has the potential. I'm not saying that it is, but this definitely has the potential to ignite a much bigger slowdown, Jason, without a doubt.
Yeah, I mean, this is just another of the many indications of a recession / depression that's on its way. So, and you had mentioned earlier that, that there might be a little bit of a market melt up after the rates stop going up. But if these indicators get worse and worse and worse, yeah, they might stop raising the rates, but there might not be a market melt up if things just, keep falling off a cliff like they are, Joe.
That you bring up a good point, right? We'll get a rally if they stop raising rates and we haven't really started the decline. If the decline's in full force and they do it, you're probably right. It probably isn't going to be much of a saving grace. But here's another thing. You want another example? I think this one really stands out, and I know all of you can relate to this. If you are a parent at all or a grandparent, you know what I'm talking about. The Economic Collapse blog, it's a great blog, and I'm a big fan because they like to do a lot of lists and things like that, easy to read. But he's talking about when are we going to wake up and admit that our system is failing. And what he's talking about is the percentage of young adults needing to live with their parents. The number, and they just keep getting worse. It's crazy how bad they are. We'll talk about 800-951-0592. Joe and Jason, Patriot Radio News Hour. Red alert here, Silver Eagles. They are $620 a roll. All that's left right now are 2023s. And this is how it goes. The older dates go. When you get down to just the current date, you're going to start seeing premiums shoot up again. So if you're a Silver Eagle buyer, get some put away today at $620. Silver's had a really good week despite things. On the gold side, gold's up 8.5 now. Yesterday we told you, hey, we had a small amount of 20s, which we did. Yesterday afternoon, I got a call from our largest wholesaler. They're the largest wholesaler in the whole world. And the guy Doug is there. He's like, Joe, what's going on? And I'm like, what are you talking about? Well, how come you guys aren't ordering like you used to? And I said, well, the other guys are cheaper. Well, today he is giving me the same price on $20 gold pieces that I was getting other places. So we can still do these 20s at $21.75. This is a huge savings. And believe me when I tell you, everything is set up. Gold and silver are set up. We just don't know how much longer. Is it another month? Is it 3 more months? I think 6 months at the most. Because once the things start going, the Fed stops raising rates, the things get worse. Gold and silver are taking off. They are taking off. You need to be a buyer here. And if it's not today, it's got to be soon. You need to start adding, or maybe you just need to start. Right? Well, I'm going to wait. I want to make sure it's really going to go. No, it's going. Take advantage of the opportunities today. $20 gold pieces. $2,175. Rolls of Silver Eagles at $620. If that's a little rich for you, I understand it. I just got an email. It's great that people want to sell products, and let's do it. I got a handful of those $5 Liberties at $5.75 because that's not a big savings, but I have quarter ounce $5 Liberties, $5.75. But Jason, the one thing is clear, that the spark we're waiting for for it to get lit here. There are sparks everywhere. It's just a matter of time. But if you really want to talk about the decline, and this really, I think, for people like Jason's age, my age, like if you're between anybody over the age of 40 could really relate to this. When you talk about, and I'll call them kids, I guess, for lack of a better term, but 18 to 29-year-olds. So that's a pretty big group of people. So 18, you're graduating high school, right? 29, I mean, well past college age years. 45%, 23 million are living with family. We haven't seen numbers like this since the Great Depression. You got to remember, back in the old days, women didn't work and you stayed home till you got married. This isn't the case. And yet we're talking about this is how difficult it's actually become. I tell you the story all the time. Moving out of my house, I was 17 years old. Didn't look back. Why? Because you could get a minimum wage job. Osco drug. $3.15 an hour. And I didn't have to live at home. True story. And neither did anybody else. I don't care. You're working at GM. Hey, I got a job at GM. All right.
Stop.
I got to live at home. What? Well, yeah, I'm making $15.71. I can't. I gotta live at home. And here's the funny thing when you talk about it. It's not. I know people say, "Oh, well, homes are so expensive and interest rates now." I don't know about you, and Jason, and maybe you were different. But most people in my generation, when we moved out, we didn't buy a house. We rented an apartment, or we rented out. You went and rented something. Forget about buying a home. Jason, they can't even rent an apartment.
Yeah, they can't, I have a 19-year-old, and he probably, if he figured something out, he probably could push himself out there, and he's biding his time. He's in a pretty good situation if he wants to move in different directions, but I think a lot of kids don't even have that benefit. I think a lot of kids that come out of college, or they come out of high school, or they're coming out of the military, or whatever, and there's just nothing there that speaks of, here's the kind of money you need, and we're going to pay you this, and you can go get your own life together.
Yeah. Here's your student loan payment, right? Here's your student loan payment. Here's your car payment. Here's your insurance payment. Here's your health care payment. It's just not there. It doesn't exist. I saw an article about cars. The average price of a 1-year-old car. So, hey, I don't buy new. And I don't buy new. Now, I buy next to new. Right? I'm not buying, if I needed to buy a car, I don't buy a 10-year-old car, 15-year-old car, but I'll buy a car that, 1 to 3 years old. That's kind of what I do, right? That's just me. That the cost of a 1-year-old car 3 years ago was in the mid-20s, about $25,000. Today, it's $47,000. So when you sit there and again you talk about being able to do it, like the only kids I know that can do it, well, I got lucky. I'll take Joey. Right? Joey can do it. Why? Because he doesn't have any student loans, and mom and dad gave him a car that's bought and paid for. Right? So I don't have a couple of the big payments that and he's got 2 roommates. Right? I mean, that's how you do it. He's dating a wonderful young lady. graduated. She was a Division I tennis player, graduated from Marquette. She's 24 years old and has to live with her parents. I mean, that's just how it is anymore. You tell me that's prosperity? Far from it. Patriot Radio News Hour will be back after the break. (800-951-0592). Joe and Jason, Patriot Radio News Hour. $20 gold pieces, $2,175. And then Silver Eagles. Again, I'm just telling you. Supply has disappeared. Right now we only have 2023s, and once those are gone, I'm anticipating higher premiums here. Take advantage, $620 a roll on U.S. Silver Eagles right now at 800-951-0592. I'm torn to where to go next. J.P. Morgan out saying that the consumer, they are now turning very negative on the consumer. And again, remember, student loan payments now, this is it. You got one more week to make your payment, and then, the interest and everything else starts going. But I'm going to go here. I think this is where I've decided I want to go. The world's fourth largest iron ore producer. It's a European company. They made an announcement that they are no longer going to purchase carbon offsets. So this is that ESG crap that we've been talking about. Matter of fact, I think, Jason, on the Half Empty Cup, we did a whole show about the carbon offsets actually don't do anything to offset carbon, right? That the vast majority of it is actually not spent on offsetting any carbon whatsoever. But they made the announcement yesterday that they have stopped purchasing carbon offsets and says that we are the only heavy emitter in the world to stop purchasing voluntary offsets, but don't expect that to be the case in the future. I think Shell's considering it. Jason, another one of these nonsensical programs that's cost us a lot of money. When you think about inflation and causes of it, forcing these companies to purchase these quote-unquote offsets that actually offset nothing.
Yeah, no, it's when things get to a little more, cost prohibitive with the inflation. Suddenly, all these fun little, global warming, climate change, whatever you want to call it, policies don't seem to make sense even more. They didn't make sense before, but now when everything's expensive, companies will end up doing what they have to do. They'll cut everything that's nonsense out first. That's what it sounds like they're doing here.
Right.
Exactly. Just as a point, as you were, I was a little distracted coming into the next segment, but you're talking about kids not being able to stay at home. I was just thinking, in my brain as you were talking, if you're 40 hours a week at $40 an hour, a lot of people I think would love $40 an hour. That's $1,600 a week. The first of those 4 weeks goes right to taxes. There goes $1,600. Now you got 3 more $1,600 weeks. Well, rent or so-called mortgage, that's going to be around, I would say around $2,400. Some people are cheaper, some people are more expensive. That takes another week and a half out. All you have left is a week and a half of money, $2,400, which for a lot of people that would be plenty for food and gas and everything else. That would be pretty comfortable.
Well,
but
at
$40 an hour, but think about that.
Now they got a car payment, insurance payment, right? I mean, it's gone.
That's $40 an hour. $40 an hour. I mean, just by simple math, doesn't work.
$83,200 gross is $40 an hour at 40 hours a week. It's not.
There you go.
Again, how did we get here, man? I remember when I first got promoted, I was making $42,000 a year. Man, I thought I was rich. You're making $42,000 a year in your 20s. Right now, you're living with your parents. I mean, that's really the size of it, right? You're living with your parents. You went
that's McDonald's.
in one generation from I thought I was rich to living with mom and dad.
That's McDonald's, $20 an hour full time. I mean, that's what 42 is versus 82. It's $20 an hour full time. Yep. So I just had to throw that out there. I was thinking about that as you were moving on, but it's like, you know, it's incredible that someone earning $40 an hour is having to figure out how to make it work.
So, yesterday, Jason and I were talking. We know digital currency is coming. It's a fact. And we're trying to figure out, what are they gonna tie all the different digital currencies to something like the strategic drawing rights of the IMF, or is there going to be a platform? Is there going to be a way for them to trade? Right? How many digital renminbis to digital dollars? Well, guess what? The regulated liability network. You may want to start paying attention here. They are the bank's global head of post-trade. What they're talking about is digital currencies, and they're saying, now listen, this is the big part. The transformation of payments is going to happen within 5 years. By the way, J.P. Morgan revealed that it is a major player in this platform. And what this platform is set up to do is the network aims to bring together banks and central banks to support different types of digital currencies all on the same network. This includes central bank digital currencies, i.e. deposit tokens, and regulated stable coins. By the way, the report said in July it involved several other U.S. banks, as well as the New York Federal Reserve and MasterCard. Don't worry, it's not happening. No, it's not happening. They're just doing this for fun. Get that money out of the bank while you still can. 800-951-0592. Jason and I were coming right back. Final segment of the week. (800-951-0592). Final segment of the week. This is out of J.P. Morgan. And I don't know what else to say here, but here's a quote. Ready? If we bicker and argue about certain plumbing pieces that exist today, we'll never get there. To me, 85 to 90% of what we're talking about today and how we do business, right? Cash and checks, right, won't exist in 5 years. It's going to look a lot different. Once you accept that, you can argue about philosophical facts, right? Hey, once you accept it, you can argue about all the freedoms we may or may not take away from you. But make no doubt about it, Jason, this is exactly what's coming.
Yeah, that's what's coming, Joe, for sure. I mean, that's what I was kind of speculating the other day is could there be all these different named digital currencies, but they're all connected to one system. So as an example, let's just go with BlackRock. BlackRock is going heavy into Bitcoin. And I think Ethereum works a little bit better than Bitcoin, but let's just stick with Bitcoin. Let's just say they're placing their bet there. If you have the European Union digital currency, but it's working through the Bitcoin blockchain, you think you're passing euros back and forth digitally. But if it's all going through Bitcoin, then, Joe, if that's how the system is, it forces into one specific digital currency, which is called Bitcoin or Ethereum, then if BlackRock has 50% of it, right, then they can cause the value of the money to go up or down simply by pulling or putting more in. It's just like the Fed. They could turn digital currency but they have to, that's why I think they need to link all these digital currencies into one exchange, and they'll look like the illusion of choice, but not really.
But not really. And that's exactly, you're hitting it right on that. That's exactly what J.P. Morgan said. Hey, by the way, we've got everybody involved. All the U.S. banks, the credit card companies, all the foreign banks, all the foreign central banks, the U.S. central bank. Yep. Yeah, we're going to have all kinds. We're going to have the Fed coin. We're going to have the Chinese coin, right? The European coin, this coin, that coin, token, whatever word you want to call it. But it's all going to reside on this one system, so we can have, right, that's that master control that all of us worry about. And it's right there. And again, it's not like they're hiding it.
Right. Doesn't sound like China versus U.S. there, does it, Joe? Sounds like China and U.S.
Really
both signed up. Right? I mean, I keep saying this to people. They just don't understand that, when it comes to the people that actually make the decisions, there's a Chinese government and there's an American government. And not all of these people in this government think that understand how it actually works. So we need to stop those Chinese. Yeah, we need to this and that and everything. But at the end of the day, the same people that tell the Chinese government how they're going to run economically is the same people that do it here. And this digital currency, Joe, if run off of one single exchange, is a complete death knell of all citizens' currencies, Joe. It's complete control.
800-951-0592. Jason and I, we're coming right back with the Half Empty Cup.